At last, on a sunny day in London, a breakthrough. After years of negotiation, a deal to prevent the world's tech giants from avoiding billions of dollars of taxes. A deal many people thought would simply never happen.
It's a very proud moment. Whether it's people operating in tax havens or it's digital companies, we're going to level the playing field and inject that principle of fairness into our global tax system.
The details are complex, but the deal G7 finance ministers have agreed comes down to two key reforms. A global minimum corporate tax rate of 15% to prevent companies like Google, Facebook and Apple shifting profits to low-tax jurisdictions, and new rules to calculate what they owe and where. While it could involve billions more pounds of revenues, it's still unclear whether those rules, for instance, would apply to Amazon. Now, this might have happened in the UK, but the main reason it's happened at all is because of pressure from the White House and US Treasury Secretary Janet Yellen.
What you're seeing is a revival of multilateralism, a willingness of leading nations in the G7 and the G20 to cooperate to address the most critical challenges facing the global economy. And this international tax race to the bottom has been a problem for many, many countries for decades.
It represents a real watershed.
The last time there was a global deal on business taxation was all the way back a century ago by the League of Nations. So while there's still some question marks about the ambitiousness of this, there's no doubting the momentousness of it. But still, there are a couple of questions. First of all, how will this actually work in practice? Secondly, beyond the G7, will other countries actually sign up to it?
Ireland has drawn in billions of euros of investment thanks in part to its famously low corporation tax of 12.5%. But that rate is below the floor the G7 agreed, meaning, says its finance minister, a significant impact on his country.
Well, from the modelling that we have been doing, we have indicated that it could affect up to 1/5 of our corporate tax revenue. But what we've also been doing is we've been planning for this. So those kind of revenue losses are already included in our budgetary calculations.
Of course, that depends on this deal getting approval from the rest of the developed world. That's not a given, but the OECD, the institution which effectively wrote this tax template, is confident.
Today there was a very broad consensus and there's more work to be done. There'll be more conversations and in the end it's important to have a global taxation system that is overall fair.
In theory, this deal could bring in billions for the UK. In theory, it could stem the tide of tax avoidance. In theory, it could change the relationship between big business and the state forever. In theory. But here in London, what once looked only theoretical has become that bit more real. Ed Conway, Sky News.